I got action here. Stocks about the numbers, and we had another cheap stock that we've been keeping, well, I've been keeping an eye on for quite a while. I know it's one that is flying underneath the radar. A lot of people don't look at it, and even when I've done update videos, usually doesn't get a lot of views, which is fine because I know we're all into different things, but this is a smaller company, as you see, only a couple of dollars a share. I initially brought it on this channel at about 3.25. It dipped down to, I believe, about 2.5, maybe 2.75. I did an update. I said I still liked it in the numbers. Stock recently hit a high of above $6 a share, and as we see, has since pulled back into the fours. They reported earnings today, so I just wanted to go over that quickly. Name of the business, Safe Bulkers Incorporated, ticker symbol SB on the New York Stock Exchange. Closed at 441, up 6 cents, 1.33%, down about that much, 1.5% after hours now. Some people may interpret these results differently. In my opinion, I actually think it was a great report, and I think that over the future, we still see that growth. But you can see how, for the most part, the stock's been on the up and up for quite some time, and was originally at this level. Looked like we had about a head and shoulders pattern forming here. We dropped back down to the low twos. That's when I did an update. I said, in my opinion, I still like it. For the most part, the revenue has been on the up and up. They're slowly building up their fleet. They recently sold off one vessel. They brought in some cash, but they're making what appears to be, in my opinion, a younger, kind of faster, more efficient fleet. And of course, a little more economically friendly as well, which of course could help. But in case you don't know, this is a shipping company, and they are out of Monaco, I believe. Let me just double check. Monaco. So this is a little bit of an international play, but again, they, as I say, in my opinion, slow and steady wins the race, and it's companies like this that are flying underneath the radar, that don't have the spotlight on them, that usually see this growth. And as I said, we started at 3, down in the 2s, it ran up to the 6s, so that's why something like this, in my opinion, can kind of slowly climb up as no one's kind of paying attention. And then before you know it, it's at $9, it's at $10. You've been getting a dividend the whole way, but also more importantly, once it goes on that run and everyone missed it, that's when usually the media or the other hobbyists on YouTube will start to talk about it. Once they see it trending and they see how well it did perform, they'll now expect the next leg up in performance. You understand? So that's why, again, even if I do a video about a stock like this and it only gets me like 40 views, I honestly don't care, because again, right now, not to come off, with a little bit of an attitude, but right now, I am personally cash poor. I don't have much liquidity. So all of these updates and all of this research and analysis that I do is 100% for you guys. This is not for me. But again, as I said, like back here, if I did have liquidity, absolutely, I would have taken a position in SB. And as you see, it ran up over 100% with dividends along the way. So let's get into the actual earnings report, though. So SB reported Q3 adjusted earnings late Wednesday at 16 per diluted share, up from 8 cents a year earlier. Analysts were expecting, I believe the estimate was like 16.7 cents. So very, very slight miss there on the EPS side. They did beat on revenue, though. Revenue coming in at 79.2 million, was 67 million a year ago. And I believe analysts were looking for maybe like 72 or 75. Company maintained its dividend payable on December 17th. That is our dividend payment date to stockholders of record on December 2nd. That is our ex-dividend date. You need to own shares by December 2nd to receive dividend payment on December 17th. 16 a share. What were we? Yeah, 16.7, and see, they beat on that revenue. 71.5 million roughly was the estimates, and they brought in 79. And we have a big breakdown here. Let's look. Okay, so net revenue technically down slightly since last quarter. Slightly pulling back since Q1 as well. But again, if we compare to this time last year, less than 65 million. Now we're up above 75 million for the 9 months as well. You can see this time last year, a little over 200 million. Now we're up to 236 million. And that's why I say, in my opinion, follow the money, follow the revenue. Slow and steady wins the race. The net income slightly down here, quarter over quarter, as you see, was a little over 27 mil. Came in here at 25. This time last year, 15 though. And again, for the 9 months, look, this time last year, sub 50 mil, right now 78 mil. So you're noticing this trend here. Net income, same thing, slightly down quarter over quarter, up nicely year over year, up for the 9 months. So a lot of these numbers are trending in the right direction. EPS, again, as you see, this time last year, 12 cents, up here at 22 cents. For the 9 months, we're up very nicely here compared to where we were last year. So you're seeing this trend take place. Daily vessel operating expenses, you can see, look at that, nice dip down right there of almost $1 million. And of course, even this time last year, 5.357, now 5.311. So again, we're bringing our expenses down. They did mention about some slight increases in CapEx, which is capital expenditures, and they were saying that was kind of to like outfit the vessels with the scrubbers, they call them, and, you know, just some eco-friendly additions to the vessels themselves. But again, they recently sold a vessel, and they're planning to bring on a few more vessels throughout 2025, 26, and 27. They have a couple of more coming in. So they did also address the tensions and the issues overseas geopolitically when they spoke about there were some vessels in the Red Sea that were kind of being, I guess, pirated or attacked, you know. And there was also the sanctions in Russia that they speak about, but obviously we'll get to that in a minute. We'll look at exactly what the company said, but it seemed like those issues didn't really directly impact this business. And also, even though I understand it may be a concern of some people, like, oh yeah, what about Russia? What about, you know, the war in the Middle East? What if that keeps going? Understandable. But again, we saw recently that Donald Trump won the election, so Trump's going to come in, and we've already immediately had a handful of world leaders come out and say they're looking forward to working with Trump. You know, now they're kind of sitting back, they're starting to pump the brakes now. Putin, China, you know, because we were concerned also about TSM, Taiwan Semiconductor, and the fact that China was potentially going to encroach on Taiwan, potentially under this Biden administration. So a lot of people were watching that, waiting to see if we were going to have another potential war pop off overseas. And that's why, again, China coming out right away saying, hey, listen, we're okay, everything's fine, we want to talk to Trump, give us a call. So now we can see that potentially a lot of these tensions might simmer down. And just like we had from 2016 to 2020, hopefully there are no new wars that are set to, jump off. So hopefully we do have a little bit of a peacetime now over the next couple of years. So any issues like that pertaining to, a shipping company like this, probably those concerns should probably be washed right now. But we know that anything can happen. But daily vessel operating expenses, you can see sub 5 this quarter. Last 2 quarters was above 5. That's this time last year. Yeah, 4.7, slightly up to about 5. Administrative expenses slightly up here for the last couple of quarters. And here, of course, it breaks down the whole legend. But we can also see something like the cash has increased nicely. Last quarter, 81 million. Now we're up to 92 million. And you can see Q3 of last year, we were at 83 million. Now we're at 92 million. So that's why I'm saying a lot of these numbers are on the up and up. And we spoke about the revolving credit. Oh man, what stock did we just talk about? I think it was maybe Honest or something when they mentioned the credit facility with JP Morgan. Again, we look at so many stocks on this channel, and people always ask me, oh, did you hear about what happened with this stock? Look at this symbol, the way it's moving. So the problem is I'll end up looking at so many things. And then when I want to go back and I say, as you just heard, wait, didn't we just look at this? So sometimes it escapes me. But the revolving credit, again, as we saw, and as I mentioned, I believe it was Honest with that earnings report. But as we said, in my opinion, as the health of the business and the financials slowly get better and increase over time, that's going to obviously increase the amount of that credit that could be taken. So that's why now we can see I forgot to sign off Steam, my apologies. But you can see that now the credit facilities increased nicely up to 225 million. So that's slowly and steadily increasing as well. They also mentioned about, I think, some expenses on some new vessels, but I think most of it has already been taken care of, kind of out of their pocket. Unsecured debt up a little bit, secured debt down. Total debt slightly down, 489 from 491. You can see this time that was this time last year. Yeah, so technically up, but of course down over the last couple of quarters. Number of vessels being maintained quarter over quarter at 45. And look here also, I said this last time. The last couple of earnings reports, when they showed these breakdowns to us, this is what I said last time as well compared to the previous quarter. You can see the average age of fleet was over 10 and a half years old. Now you can see we pulled back to 10, sub 10, and now slightly lower at 995. So that's why we're getting a younger, more efficient fleet, but they're able to maintain their shipments. The revenue is steadily coming in. We're not hearing any issue about any liquidity on their end. They're able to take care of preferred shareholders, common shareholders when it comes in regards to the dividend payments. So in my opinion, this company does seem pretty solid. Net debt per vessel down to 8.8 mil. Look at that. Was 9.1, was 9.5, right? So slowly pulling back a lot of these quote unquote negative metrics while maintaining and improving the positive metrics. Again, Steen, my apologies. President of the company said, quote, "We had a good quarter compared to the same quarter last year. However, the charter market is gradually softening along with continuing geopolitical uncertainties." See, so that right now is what they're concerned about, because obviously you kind of don't want to sail shipments through war zones. But we remain focused on capital allocation towards our new builds program, on improving our operational efficiency, and on rewarding our shareholders with a dividend of 5 cents per share of common stock. Company gradually renewing its fleet with new builds designed to meet the most recent International Maritime Organization regulations related to the reduction of greenhouse gas emissions. Okay, that's a good thing. And nitrogen oxides emissions, and selectively selling older vessels. As of November 1st, the IMO GHG Phase 3 new build program consisted of 18 vessels in the aggregate, including contracts for 2 methanol dual-fueled Kamsarmax new builds. 11 of such new build vessels have already been delivered to us. The aggregate capital expenditure of the new build program is approximately $662 million, of which $455 million, or almost 70%, have already been paid. Big positive in my eyes. Furthermore, the company is continuing the environmental upgrade program. Increased energy efficiency, lower fuel consumption, which is expected to reduce emissions. As of November 1st, 24 existing vessels have been upgraded. The cost of low-friction paint applications that are part of the environmental upgrades is recorded as operating expenses, while the cost of energy-saving devices is capitalized and recorded as capital expenditures. So that's why making these kind of economical, environmental improvements to the vessels, as we see right now, taking on a little bit more of an expense. But again, as we say, that we're kind of heading it off at the fork, right? Like the company probably sees like they're probably eventually going to have to do it, so why not just do it now, bite the bullet? But again, it seems like all the numbers are pretty much being maintained and remain pretty healthy in my opinion. So the fact that they're also doing these expenses now to upgrade the fleet, in my opinion, is a good sign. I'm going to say it's a good sign. All eight of the company's Capesize class vessels are equipped with exhaust cleaning devices, also known as scrubbers, during the third quarter of 25. And as of November 1st, the company has completed dry dockings, including environmental upgrades on 3 vessels. Trudeau's, Padulas Merchant. I love the names of these vessels. And has initiated dry docking, including environmental upgrades on 1 vessel, the Venus Heritage, with a total of 25 estimated aggregate downtime days. It's not really a lot of time when you think about it to upgrade a vessel, less than a month. As of November 1st, we had a fleet of 46 vessels, consisting of 8 Panamax, okay, with an aggregate carrying capacity average age of 9.8 years. In our fleet, 11 are Phase 3 ships built 2022 onwards. 11 vessels are eco ships built 2014 onwards. So again, we're getting a younger, more eco-friendly fleet here. From our remaining existing fleet, all but 1 have already been environmentally upgraded. During the fourth quarter, we have scheduled to upgrade the remaining vessel. So that's what I mean. The fact that most of the vessels have already gone through this upgrade phase, in my eyes, is technically a good sign because we kind of got it out of the way. As of November 1st, we had an order book, two of which, okay, 7 vessels, 2 of which are methanol dual fueled with scheduled deliveries, 1 in 25, which we could hear about it over the next couple of months, 4 in 26, and 2 in 27. So now they also speak about the debt potentially jumping up in 2027. So over the next couple of years, we may be dealing with a little bit of a larger repayment on the debt, obviously causing a larger expense to the business itself. But right now, I think, in my opinion, it's still in good shape. I do personally still think it's undervalued. Getting another vessel in 25 should be good news. 4 in 26, that's why I think 25 and 26, I think personally, are going to remain up and very positive years for SB. Now, when the last 2 come in 27, and of course they have that debt obligation, then potentially we can revisit the situation and we may start to see some stagnation or some potential pullbacks if these profit margins start to get eaten away at. You understand? So we can always come back to that later down the road and see if they do happen to deal with that big issue. But again, if revenue is on the up and up throughout 25 and 26, it may just be a drop in the bucket. It may be overlooked. In July, the company delivered to her, sold at a gross sale price of $20 1/3 million, which was purchased in 21 for $14 million. Nice little profit right there. In July, company took delivery Chinese built with advanced energy efficiency. Took delivery Chinese built. Yeah, so some people may obviously, I guess, view that as a slight negative, that they have a handful of vessels from China, but they break down where the vessels were built, all the vessels in their fleet, and you'll see that the bulk of them actually come out of Japan. But, again, I know people, if the United States here domestically, if we potentially have issues with China, again, I really don't think it would affect something like SB, because even if hypothetically they get a direct phone call from us and we say like, oh yeah, don't buy any ships, any vessels out of China. It's like, yeah, it's not a big deal. They can just shift that business and buy another one out of Japan probably. So it's probably not going to be too much of an obstacle course for SB moving forward through this administration, in my opinion. Used to transport bulk cargoes, particularly coal, grain, iron ore. We intend to employ our vessels on both period time charters, spot time charters. Some of the largest consumers of marine dry bulk transportation. Stable cash flows. Operated 45 1/4 vessels. Average earnings 17,100 compared to little over 44 vessels earning 14,861 during the same period in 2023. So technically one more vessel on average through operations. And as you see, looking like, what's that, about 2,300 increase there from this time last year. So that's what I mean. Technically, a lot of these numbers are improving year over year from where they were. So, when the numbers are on the up and up, we know that eventually, unless we get some, big negative catalysts, then eventually, more times than not, the stock value will eventually be on the up and up as well. Okay, we're reading. I'm reading. One off 2.5 million. Employment is anticipated to generate approximately 37.6 million in gross revenue. About 3.5 million from scrubber use. All 8 of our Capesize class vessels have been chartered, 6 of which remain chartered durations. Consolidated debt, a little below $500 million. Yep, they cite that 100 million bond that's maturing in February of 27. Consolidated leverage was approximately 32%. Weighted average interest 6 1/3 roughly. We made scheduled principal payments of 6.7 million, voluntary principal payments of 14 million, which technically means extra payments, and drawings of 15 million under our existing revolving facilities. The repayment schedule of our debt as of September is presented table 2. Secured debt, as we see, looking to jump up 25, 26. But again, the unsecured debt, that's what I was worried about when I looked at this table. You can see the unsecured debt jumping up there in 27. And you can see the total debt as well does jump up there with the secured debt in 25 and 26. And then obviously adding those together, you can see the total debt jumping up to above 161 million for 2027. That's why I said, in my opinion, based on what I'm personally reading, I believe this company should be on the up and up over about the next year or two. As we roll into the end of 26, with people kind of reminding themselves about this potential debt increase going into 27, then they may have a rough year. But right now, in my opinion, I like it. It's still cheap. It's sub 4.5 right now, and they pay you a tiny dividend. Also, it's a shipping company, right? If you're looking for a little diversification, like we always say, there's a shipping company, again, internationally based out of Monaco. So not only are you entering maybe a different sector that you're not holding in your account right now, but also it's an international stock as well. We had a fleet 45 vessels, order book of 8 new builds. We had paid 94.6 million and had 231.6 million of remaining capex requirements. 92 million in cash. Yep, we saw this. 225 million in undrawn borrowing capacity available under existing revolving reducing credit facilities, which, as we saw, is consistently increasing for the most part. Contracted revenue of 251. Okay. Scrap value of our fleet, 330 million. Okay, we're reading. In relation, 7 builds. Scrap value. Dividend, yep, we kept our dividend. Okay, war in Ukraine. Yeah, see, they started to address some of these issues. As a result of the war between Russia and Ukraine that commenced in February 22, the US, the EU, the UK, Switzerland, and other countries and territories have announced unprecedented levels of sanctions and other measures against against Russia, and certain Russian entities and nationals. We intend on complying with these requirements and addressing their potential consequences. While we do not have any Ukrainian or Russian crews, our vessels currently do not sail in the Black Sea, and we conduct limited operations in Russia. We will continue to monitor the situation. Okay, but as of right now, you can see, even with this potential, well, it's not potential war, with this war jumping off, you can see that it hasn't technically impacted this business. Middle East, following attacks on merchant vessels in the region of the southern end of the Red Sea, there is disruption in the maritime trade and supply chains towards the Mediterranean Sea through the Suez Canal. Since the beginning of this disruption, we have diverted our fleet from sailing in the Red Sea region. The conflicts in the Middle East represent additional geopolitical and economic risks that could increase the volatility of the global economy. But again, if we have Trump in and everyone's looking to now step back and put down their arms and remain peaceful for the next couple of years, then these issues may just be swept underneath the rug right now. While our vessels currently do not sail in the Red Sea, see, it's not even an issue. We will continue to monitor the situation. Yep, beautiful. Okay. Okay, call me. Net revenues increased 75.9, 64.7 this time last year. So this is why, again, really, for the most part, on the up and up. I still like it, again, in my opinion. I think it's a very interesting play. I think it's a slow, steady grower. And again, it's one that a lot of people don't know about, a lot of people don't talk about. And as we've said in the past, again, as you see that after these stocks run and have their rallies, then everyone wants to talk about it. Oh, have you seen this one? Is it still worth buying up here? That's why, again, in my opinion, I like to do it the way I do it. Because something like this, again, has no eyes on it. Right? So that's why, as I said, something like this can fly underneath the radar, have no spotlight on it, then before you know it, it's $7, it's $8, it's $9. Then people start talking about it. That brings in more retail FOMO volume. That'll bring it up to $11, $12 a share. You understand what I'm saying? So in my opinion, I like it right now. I do still like it. Again, originally mentioned on this channel, 3.25, and when it dipped below 2.5, I said I like it even more. And even after it ran up to 6, I was saying kind of the whole way down, alerting in Discord, like, oh, hey, SB is down at, low 5s, could be viewed as on sale. SB now down into the 4s, could be viewed as on sale. Because again, you shouldn't immediately get upset about a long-term hold, because you have to deal with the short-term volatility to lock in the long-term growth. And if you started buying at 5 and now it's down at 430, you should view that as an opportunity, in my opinion, not as a negative. Depreciation up by $1 million, increased number of vessels. Okay. Yep. I mean, I didn't want to go over, again, every little thing, but I did want to look at, a handful of these metrics. And again, like the age of the fleet and whatnot, a lot of those things do appear to be moving in the right direction. So I just wanted to kind of do a broad overview. We don't have to completely, dissect this. Revenues up. In my opinion, again, these are the ones that could be interesting. These are the ones that could be interesting. And again, not to keep mentioning it, I'm not trying to hurt my hand patting myself on the back, but again, we first looked at it down in the low 3s, stock hit 630, right? So that's what I mean. Just off of finding something a little bit different that we feel is undervalued in the numbers, like we already almost saw a 100% increase already. So that's what I mean. Again, unfortunately, I know the Safe Bulkers videos never really got a lot of views. But if you did happen to take a position, you're still up a chunk. Yeah, we're just breaking down everything. I just want to see if anything else was mentioned specifically. Yeah, again, in my opinion, I know it's a broad overview, but at the same time, I do still like it. I said it time and time again. And we can see here, look, this breaks down the fleet, and you can see the country of construction, see? Going back to the earliest one, 2013, still kind of relatively new, right? That's only about 11 years old, but you can see, look, Japan, China, Japan, China, South Korea, Japan, China, Japan, China. And these are supposedly coming, as you see, second quarter 25, mid 26, second half 26, end 26, end 26. And you can see that 2 of these, 7? Yep, 2 of these 7 coming from China. But again, in my opinion, I really don't think any of this is going to be an issue for SB. And again, when we talk about tariffs, again, this company based out of Monaco, right? They're not based out of the United States. My goodness, what an extensive breakdown, though, I will say, here in this article. And for more information, give them a phone call. Okay. Again, I just want to make sure that we're not missing anything that was possibly said from the company. Yep, we have more cash. Yep, we saw that. Had a good quarter. Wait, hold on. Is this the same article I just pulled up? All right. That's enough of that. But in the chart here, in the technicals, we could, I don't know. I mean, again, if you want to kind of see what you want to see, we're looking at 633. And then if we cut down there, again, but this was technically earnings here on this drop. So that was going from the high. But if we go from the low of 430, we cut across. Again, you can see the stock came up right there, potential double top at this fib of 445 here. Actually, it hit 444, so technically not precisely a double top, but we can see we have a slight dip down here into the 430, still technically above the 20-day moving average. So we could maybe drop down, and we could see 4, maybe even low 4s. But again, in my opinion, I don't think it pays to be short-sighted with the stock because we've already seen over the longer term that we have that growth. So that's why if you happen to be in this one, or maybe now you find this a little interesting, so you're considering taking a position down here at 4, sub 4, in my opinion, I do still like it. And again, unless we hear some random policy from Trump that might directly affect safe bulkers individually, then in my opinion, again, I would kind of stick with it and I would continue to build a position. But as we know, again, some stocks outperform other stocks. And as I mentioned, this isn't really a popular one. It might not be everyone's cup of tea. Some people may not like the whole shipping industry. Some people may not want to buy shares of an international company right now, right? So I can appreciate all of those viewpoints, but this was one that I've spoken about in the past, and I saw they were reporting earnings. So, you know, I try to stay on top of the stocks that we looked at already. And, you know, if they report earnings, we do updates for any long-term shareholders. So, you know, I'm just trying to cover all bases here. But, yeah, in my opinion, we could potentially stay down, but I still like it. I'll say it again. I do personally still like it. Let's look at stock charts real quick. We'll let you go, cute little baby. And we can see that RSI was climbing up to basically middle of the road there of almost 50. And now, of course, we had, I guess you can say, mixed results come out, and we're down a couple of cents right now. 434. We can see mid-Bollinger Band 430. So that's why we might have a slight pullback there, especially after being down since the peak in early June. We've been down for a couple of months. So can we continue to drop down and consolidate inside of this downward channel going into the new year? In my opinion, yes, of course, we can. Also, at the same time, though, it does seem like it wanted to hold. And also, even this drop again is only a handful of cents, not even down to the mid-Bollinger Band. So we might actually see some flatness and then the steady climb back to the retest of the 50 and maybe 200-day moving average. So even at 440, I like it. And if it drops down to 380, as you know, I'd like it even more. But the MACD recently crossed to the upside. If we had a beat on the EPS as well, I think personally you may have seen a pop back up to 5. But right now it seems like it's just chilling, it's hanging out. But as we saw, a lot of those numbers do appear to be moving in the right direction compared to last quarter and, of course, this time last year. So in my opinion, again, for the 18th time, I do still like it. RSI on the weekly was about 42 1/3, but it looks like we might continue to step down like that. So they might bring it all the way down to that 30 benchmark range before they feel it's overextended and they start to run it back up. And also we see the 200-day moving average off screen mid-22. Now it's up to over 3.5. Right? So technically we're still below the 50-day, but if we slowly pull back over the next month or so, again, we could potentially meet up with this moving average as well, maybe 370 and change, and then it'll bottom out, have that bounce, and then go on a rage back up to maybe 5, 6. But in my opinion, it should hit higher highs. MACD was steadily dropping, potentially getting ready to curl off these last couple of white candles, black candles, whatever you use. But again, we may continue to keep slipping. me check some numbers here real quick. But yeah, we have our dividend. And what they say now, yeah, debt kind of the same. We're up to 90 million in cash, so that would be like minus 400. We still have assets outweighing liabilities. Yeah, so we were at minus 400 on the debt. You can see, though, again, you can see the trend of when I speak about a company that I like, right? Total equity basically consistently improving. Look at the book value per share. It's up here at 756. This was technically of last quarter, right? This next column hasn't updated yet, but you can understand what I'm saying. That's why even the last couple of times I looked at it, I said, wow, book value $6.90, $7 a share, stock's trading at 3, stock's trading at 4, right? So that's why I like to look at the kind of less popular stocks that are growing that no one's really paying attention to. And then when you actually look at the numbers, you see something like this, like, wow, if they closed their doors and sold everything in their name, they'd be worth 7 a share roughly. Stock right now is sub 4.5, right? So that's why we have a lot of fundamentals lining up for what could be the next leg higher going into the 7s and the 8s. But negative debt off the cash, again, minus 400 million, positive 800 million equity. So now we're up to positive 400 million. Again, we haven't even looked at the revenue yet. Keep that in mind. Market cap 470 million. PE 5.5. Again, EPS a little hit and miss. Revenue again may have topped out, but we see that we're going to potentially have a great 25 and 2026. So it just could be a lull. And also you can see the revenue for the most part jumped up to the high 70s, 80s, kind of maintained. Again, they just reported, 77, 79 million, right? So we're holding that level. Net margins jumped up from the low 20s to the mid 30% range. And again, you can see that just over the last couple of quarters, we're up to roughly, 230 million, they said. You know, we're bringing in income of, 70, 80 million already. So that's why we're looking for a 300 plus million year with about, 100 million plus profit. So that would be roughly another 400 million in value. So in my opinion, debt minus cash, negative 400 million, plus equity brings us to positive 400 million, plus roughly 300 million in revenue and 100 million estimated in profits would be another 400 million in value, which in my opinion would put quote unquote fair value of this business at $800 million. Current market cap sub $500 million, which is probably why, again, the fundamentals are lining up in agreement with me with a book value of over $7 a share. So that's why, in my opinion, the business is undervalued. And remember this as well. Climbing this market cap up to 800 million is quote unquote my personal quote unquote fair value. And we know that stocks can trade 1.5, 2, 3 times that fair value. So even if we go up to fair value, again, you're looking at 80, 90% increase from here. And then if we go 1.5 fair value, you're talking about roughly a $1.2 billion market cap. So do the math. Do the math of what could potentially be on the horizon for something like SB over maybe the next 12 to 18 months. And if it's boring and you don't think it would happen, just remember, we looked at it at 3.25. We looked at it at 230, 2.5. Then the stock hit 633. So just keep all that in mind, even if it may be, not something you look for, not something you would, usually be known for taking a position in, but could be something interesting and could be definitely be worth keeping an eye on. But that's pretty much it. I just wanted to break down a lot of the info we got and kind of show that a lot of the metrics are moving in the right direction. And I wanted to recrunch those numbers real quick to show you, in my opinion, what I'm expecting over the long term as well. But we know that anything can happen. And of course, they mentioned the tensions rising with Russia, Ukraine. They talk about the Red Sea issues and, of course, the Middle East tensions. So we'll see now if we kind of restore peace overseas in Asia, in Europe, in the Middle East. And hopefully if there's no policies that directly affect safe bulkers, then in my opinion, stock should be fine. But that's pretty much it. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.